Hello traders, welcome back to the channel. In today's post-market analysis, we are going to break down exactly how Nifty behaved throughout the day and how beautifully it aligned with our morning prediction of a flat, range-bound and low momentum market. The chart you are seeing now tells the complete story, and I'll walk you through every phase of today's price action. Recap of morning prediction. In the morning we discussed the global cues. Mixed US, flat Asia, flat Europe. Slightly positive USD/INR. Weak crude oil. From this, we clearly said, Nifty will be flat, choppy, and range-bound. No strong trending momentum expected. Expect sideways price action with small dips. And today, the market behaved exactly like that, slow, controlled, and without any major breakout or upside strength. Actual market behavior. Let's look at what Nifty actually did. Early session, mild flat to negative start. As soon as the market opened, Nifty showed weak sentiment. Instead of any upside push, candles started forming lower highs. This fits perfectly with our statement. There is no strong support from global cues to drive Nifty upward. Gradual downtrend throughout the morning, no breakout. No upside momentum, just controlled selling. This is exactly how a flat, range-bound day behaves when sellers slightly dominate. Midday stabilization around noon, Nifty found temporary support. You can see the candles compressing, wicks, small bodies, and slow movement. This is classic low volatility, sideways action, perfectly matching our prediction of a range-bound day. Afternoon consolidation. From 1 p.m. onwards, Nifty moved sideways near 25,930, 25,960 levels. Even though it fell nearly 1%, the fall itself was not a sharp crash. Instead, it was a slow decline followed by consolidation, again matching flat negative expectation. How our prediction matched? Let's summarize how accurately the market followed the prediction. Flat bias? Yes. Market showed zero signs of trending strength. Range bound? Yes. Even during the fall, price stayed within controlled bands and never broke into a runaway trend. Weak momentum? Exactly. The chart showed small candles, no strong volume push. No aggressive breakout. Sideways behavior in the second half. Perfect match. Just as expected, after the morning drift down, the market flattened into a stable sideways zone. Why this happened? So why did Nifty behave exactly this way? Because global cues were not strong enough to trigger buying or selling momentum. USD/INR was slightly positive, crude was weak, and every market around the world was flat, showing no directional trigger. Whenever global cues are mixed to flat, Nifty becomes emotionless. Traders avoid taking big positions. Algo trading dominates with small tick movements. Market slides slowly or moves sideways. Exactly what happened. Key lessons for traders. Here's what you can learn from today. Flat global markets equals flat Nifty. Our prediction was driven by global data, and the market followed it. Don't expect big moves in low momentum sessions. Today's price action was slow and steady, not trending. Sideways markets are dangerous for breakout traders. Fake breakouts, small candles, and slow moves can kill accuracy. Respect support resistance zones but avoid overtrading. On days like this, less is more. Final conclusion. So traders, this was your full post-market analysis. Our morning prediction of a flat, range-bound and weak Nifty turned out to be spot on. If you enjoy these accurate predictions and daily market breakdowns, make sure you like this video, comment your thoughts, and subscribe to the channel for more such deep and meaningful analysis.